Uranium finds itself in the market spotlight once again, with financial giants such as Citibank and Morgan Stanley covering the prospects of this industry, which they claim is on the verge of experiencing a renaissance. Not only does uranium face critical geopolitical catalysts that could see its price take off, but its zero-carbon nature could make it one of the prime beneficiaries in the clean energy transition within the following decades. One trigger that could see the uranium industry taking off is the inevitable sanctions on the global uranium supplier, Russia, which could lead to a surge in its spot prices, and subsequently uranium stock prices. Similarly, the advent of advanced reactors and small modular reactors is likely to see wide-scale adoption in the developing regions of Asia and Africa in the future. Moreover, the Inflation Reduction Act is expected to prove a major boost to struggling American nuclear plants, which would face the opportunity to reorganize and become competitive. For an industry that is supported by so many tailwinds, the investment would be a no-brainer. Therefore, we present some of the top uranium stocks in the market that could take you to soaring new heights. To start off our list, we take a look at the Canadian explorer and developer of uranium, CanAlaska Uranium Limited, which trades in the OTC as CCVUF. The primary area of focus of the company is the Athabasca Basin, in northern Canada, which is most well known for being the world's leading source of high-grade uranium, and has supplied up to a fifth of the total global supply. Although CanAlaska is still in its pre-revenue phases, it is standing on the brink of a major breakthrough, and hence offers an early bird investment opportunity to those looking to take on a rapid growth wave. In 2021, the company made a series of major findings in 3 of its projects. A new polymetallic uranium discovery was made in the Waterbury South project, which the company fully owns, as well as high-grade findings in its joint venture projects of West MacArthur and Moon Lake South. In the wake of the anticipated surge in uranium demand to power electrification, CanAlaska is well suited to take off in the future, and profit from the increasing uranium spot prices. Because of this optimal positioning, CCVUF share prices show a high correlation to uranium spot prices, which makes the stock a great means for investors to enhance their exposure to this high-potential industry. Moreover, the company's management holds up to 4.5% of shares in the company, which indicates that they are confidently along the ride with shareholders. Furthermore, considering that a number of small and large nuclear reactors have been scheduled in various Canadian regions, CanAlaska is fully primed for long-term growth. The second stock on our list is Fission Uranium Corporation, which trades in the OTC markets as FCUUF. Fission Uranium 2 is a Canadian explorer and developer with its core focus surrounding the Athabasca region. Like its competitors functioning within this zone, Fission Uranium holds access to a world-class uranium site that holds some of the best uranium exploration and development infrastructure, and a highly skilled workforce. FCUUF, however, faces a core advantage that its peers in the Athabasca region do not possess. Unlike other players, the company holds a core and unmatched timing advantage. Given its development efforts throughout the last 10 years, its PLS high-grade uranium project is one of the few that is at an advanced stage, ensuring production to initiate in this very cycle. These conditions make Fission Uranium the perfect company, with the perfect project at the perfect time for development. A first-mover advantage is likely to deliver a substantial edge to the company, which will boost its financial sustainability to a large degree. Another point worth mentioning is that China General Nuclear Power, a Chinese state-owned corporation, holds a stake of almost 15% in FCUUF. Knowing China's nuclear ambitions, which the government has been largely vocal about, it is apparent that Fission Uranium is likely to be attached to the aggressive growth trajectory that the Chinese nuclear energy program is aiming towards. The stock has several points of strength and major tailwinds to support its rise, which makes it a great uranium play to invest in. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is Uranium Royalty Corporation, which trades by the ticker UROY. Unlike other uranium players discussed on this list, UROY has a different business approach, which is based on the management of a diversified portfolio consisting of high-value uranium assets from across the globe. These are diversified not just by geographical location, but by a range of metrics which include stakes in different uranium players, of varying market caps, as well as ownership of projects of various phases of development. UROY also continues to increase its physical uranium holdings to over £1.5 million, of which it benefits tremendously, given the rising spot price of the material in the global markets. The company's total current assets, consisting of its inventory, amount to $104 million, as per its most recent balance sheet. UROY works with a royalty model, instead of a revenue-based one, which allows it to provide non-dilutive project financing, through a highly robust method of due diligence and feasibility appraisals. Based on this model, the stock delivers ample exposure to the uranium industry, which is on the cusp of an unprecedented takeoff. Holding a stake in UROY could materialize into a substantial fortune by the next decade or so. Next up, we take a look at a giant of the global uranium market, Cameco Corporation, which trades by the ticker CCJ. Cameco has a market cap of almost $10 billion and holds a leadership position in the markets of Europe, East Asia, and the Americas. In its most recent quarter, the company saw its EPS figure rise from a negative 8 cents per share to a positive 14 cents per share, on a year-on-year basis. During this same time, the company experienced revenue growth of 50%. Despite these fundamental strengths, the most compelling reason to invest in CCJ is due to the company's joint acquisition deal of Westinghouse Electric Company, along with Brookfield Renewable. Cameco will own 49% of the entity, with the remainder 51% belonging to Brookfield. The deal is a long-term play and a highly strategic move, based on shifting market dynamics, which the management of Cameco has brilliantly recognized. Westinghouse is responsible for supplying equipment to approximately half of the world's 436 existing nuclear reactors, and has recurring long-term revenue contracts. The nuclear supply market, however, is dominated by Westinghouse's chief competitor, Rosatom, a Russian company. A number of European countries had signed agreements with Rosatom, which are unlikely to continue, with calls for sanctioning Russian companies, especially nuclear fuel suppliers. This creates a prime opportunity for Westinghouse to fill the void, and become a monopolistic global leader. Cameco, given its 49% ownership of the entity, would not need to bear the cost of management, and can focus primarily on uranium mining. This places the company at a core advantage, which could see it take off exponentially in the following years. The final stock on our list is the world's largest uranium play stock, National Atomic Company Kazatomprom, which trades by the ticker KAP in the London Stock Exchange. In terms of its global positioning, KAP is the most well-suited to reap the benefits of the oncoming uranium bull market, far better than any other company in the game. This is because KAP holds ownership of the highest grade of uranium assets, found in Kazakhstan, which are also the largest reserves in terms of sheer volume. In terms of output figures, KAP stands as being the largest producer across the world, and holds some of the highest profit margins. All of these conditions essentially make the company a cash flow machine, that is poised at delivering extreme value to its shareholders. Its revenue as of June 2022 stood at almost $350 billion, which was nearly double the sales figure of the prior year, given increasing uranium prices. Despite such strong plus points, KAP price has barely changed in the last 12 months, which signals a heavy undervaluation. One reason for this is the company's Russian connection, which places severe strain on its business, due to geopolitical tensions. Secondly, its listing on the London Stock Exchange places it out of reach of the typical American investor, adding liquidity constraints. However, the company alone is responsible for over a quarter of global supply, in the wake of a potentially surging demand. To add, uranium mines take decades to develop, which adds a heavy margin for any competitor to catch up. This strongly suggests that the KAP rise is inevitable, and investors should not miss out on this epic opportunity. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well suited for long-term growth. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.